Welcome everybody to this very special session on green shoots. Over the last 3 months, we've run 10 sessions covering topics from raising capital during the pandemic, to the tough decisions founders have had to make, to the support packages launched by the private and public sectors. Many of the speakers that have joined us on these sessions have also offered up their time for one-to-one mentoring sessions with you. I think we've got 144 hours worth of sessions now available and being booked on our website. And you can sign up to these mentoring sessions on the SFF site under the Pay It Forward initiative. As well as entering phase 2 of Circuit Breaker here in Singapore just at the weekend, it seems that we're entering the next phase of discussion around the road to recovery. We were heartened to see the BCG report released last week that pegged FinTech fundraising in Singapore at 650 million Sing dollars for the first half of the year. So after a slow Q1, investments really seem to have bounced back and have now grown year on year to date, with a strong investment focus on SME banking and an increase in M&A activity across the region. Today, we're joined by industry titans Piyush Gupta and Sopnendu Mohanty to reflect on this pandemic period and look ahead to the FinTech opportunities that are emerging. Close to 2,000 people have registered to join this session from over 50 countries. So welcome again. Thank you for joining us. Let's get started. I'll hand straight over to you, Pat.
Thanks, Becca, and happy Friday to everyone that's dialed in. And so today we had two leaders that have fundamentally shaped the future of their respective organisations, and they both have a number of things in common. Both are globally recognised as leaders in their fields. Both are Citibank alumni. Both are originally from India and have studied there too. And lastly, both are never short of a word or two. So expect a lively, thought-provoking session that's going to really set you up for the weekend. And it's a real pleasure to have Piyush, the CEO of DBS Bank, join us today. So thanks for joining us, Piyush.
Very happy to be here, Pat. One thing that we don't have in common is that I was responsible for helping shepherd Mohanty into the MAS, because when we as a group decided we should really dial up FinTech in the regulatory space, the MAS seniors asked me what I thought, and I said, Mohanty is the best guy you can find for the job. So Sopnendu, you can't say that for me.
I think you waited for 5 years to tell the secret.
The secret's out now. So next up, we have Mr. FinTech, courtesy of Piyush, also known as Sopnendu, the Chief FinTech Officer at MAS. And so thanks for joining us, Sops.
Thank you. Thanks for having me with Piyush.
And so, Piyush, you've been quite vocal in the marketplace, and you recently wrote a piece on how COVID-19 is changing consumer preferences, working patterns, and supply chains. So how have you responded to the changes, and how has this impacted DBS's strategy this year?
Well, Pat, I think it's safe to say that the COVID has really led to an acceleration rather than a fundamental shift. Because much of what we are doing, we have been doing now for 4 or 5 years. But the acceleration has been helpful, and it has allowed us to actually bring a lot of recalcitrant people who are naysayers or somewhat caught by inertia into the mainstream of the change. Now, what are the key changes? Without a doubt, the number one has been accelerating the digital agenda, both with our customers as well as internally in terms of our own processes and staff. On the customer side, I didn't have a choice. You had to give customers the capacity to access seamlessly and easily. Like I said, since we've been doing this for several years, it was quite seamless. We didn't skip a beat. But what we did realize is even with all of our efforts, we had several last mile gaps. So 98% of everything was digital, but the 2% which we had either not digitized or it was a tail event kind of situation we hadn't thought about. We had to very rapidly fix that. And fix that we did. But that was one change. On the back of that, we realized that you could actually not only see substantial shift and increase in digital volume of activity that's to be expected. It's up anything from 30 to 60%, depending on whether you're talking about account opening or trade finance or cards. But the reassuring thing was you started seeing the older people, like I said, the holdouts, also beginning to shift. We had a 4x increase in the people between 60 and 80 who are willing to use digital tools and digital activities now. So that's obviously quite powerful. The second place where obviously things have accelerated is internally. Now, we've always had a flexi working policy, the capacity for people to work from home. But the truth is, sometimes it's to do with the risk appetite of the company. Sometimes it's to do with the psychology of our middle management and our managers, which created a situation where there was limited take-up. Now, when you've done 3 months where 80–90% of your employees are working from home, you made a profound shift, both in risk appetite as well as that psychological aspect. So I do think that's another change that we're going to accelerate hugely. Outside of that digital change, I think a couple of things are going to be important. One, I'm convinced that this whole agenda around purpose and then broadly linked into ESG, sustainability, intent, I think that's going to become even more important in the days and years to come than it has been in the past. And that's for a couple of reasons. One, I think people have now figured that tail risk can happen. And so we better start thinking about that. Second, I recognize most people have figured that people are willing to take short-term pain, a lot more pain than we'd expected. I mean, nobody thought the world would be in lockdown for 3 months. And this wasn't voluntary, we had a gun to our head. But nevertheless, people took a lot of short-term pain. And I think there will be a recognition that we can, as collective society, take a lot more short-term pain for long-term interests. The other dimension of it, of course, is the social anxiety and angst. It's going to force people to think a lot more about your social agenda, your community agenda. At DBS, we've always been focused on this, but I think we're going to have to continue to accelerate and dial that up. Separately from that and last, I think outside of the COVID itself, I mean, there's some macroeconomic implications and social political implications that arose from COVID. One is interest rate collapse around the world. And for most banks and bankers like ourselves, this period of what's going to be long, low forever, low for longer interest rates is going to have quite a profound impact on our business models. The standard banking practice of relying on balance sheet and NIM is going to have to be supplemented at the very least by alternative models that promote fee-based activity and so on. So we've got to be thinking quite actively around that. And then finally, you alluded to it, I think the geopolitics, the China-US problems, and thinking about supply chain resiliency and not just supply chain efficiency, that's going to provoke a change in the corporate sector. And therefore, we as banks have got to be nimble and adaptive to be able to respond to that. So all of these things are things we're working on. We have task forces organized around this, thinking about our way forward and our way ahead. I finally, we just have to keep working on skilling and training our people appropriately. Again, we've been doing that, but in this COVID, we doubled down on that. We, obviously moved a lot of our training online. I'm a big believer in learning by doing. And so I'm not sure, some people might have seen, I posted it on LinkedIn earlier today. For example, I've been very keen on pushing the organization to learning more about analytics, AI, machine learning. And so we rolled out a program with AWS. It's a simulated game where you learn how to use reinforcement learning to teach your car to race. And, I had to learn it myself. We've trained thousands of people to do that. It's great fun. But stuff like that is actually going to be crucially important. And again, we made a shift in that direction because of COVID.
Thanks for sharing, Piyush. And so now that we've heard the bank perspective on change and how you've coped with that, it'd be good to hear the regulator's perspective. And Sopnendu, how has MAS's FinTech strategy had to evolve, as it were, pivot over the course of the year?
Hi, Pat. I guess we are going to complete 5 years of FinTech journey in next month. And if I look at numbers, if numbers mean something, if there are 4 ways to look at. If I look at the number of companies who were doing FinTech in 2015, we had less than 20 FinTechs. And today we have 1,000 plus FinTechs, and almost 700 of them are registered with some credible data with the Singapore FinTech Association. So that you take a 700 number is quite a jump over the last 5 years. If you look at number of jobs, new jobs got created, we have more than 10,000 jobs over the last 5 years. So new jobs came through this whole process because that created a new momentum for us, a new opportunity for a lot of our young, bright people. And the third aspect is capital flow. I still remember when 2015, when we looked around, what are the amount of money being spent, we were less than 20, $30 million. Last year, we clocked 1.5, $1.2 billion of investment, quite a jump in 4 years' time. And more interestingly, as I was looking at this year, I thought my KPIs will definitely go the wrong direction due to COVID. And right at the edge of COVID crisis, the numbers came in. And we have completed a half year of our investment numbers. We are close to $640 million. And it's more important that it happened right to the crisis. And if you look at the numbers from April to May, it went up by 200%. And if you look at where the money is flowing, it is flowing to companies who are collaborating with the banks. It is flowing to the companies which are supporting the SMEs. So in a way, it's a testimony that the focus we had in Singapore, that we will build an ecosystem where the fintechs are working with the FIs, really worked for us. And it showed that during crisis, there are the good companies where investors want to stand by. So that really helped us to really look back and think something good we did in our strategy, the way we looked at fintech. Now, if you think about any center, there are four aspects we look at. We look at the innovation effect, the network effect, the ecosystem effect, and the regulation effect. And let me go through that one by one. First is the innovation effect. Today in Singapore, and if there are close to 40 plus innovation centers. 30 odd are from the banking side, and rest 10 are from tech companies. They created the necessary innovation effect. And Singapore provides, through our own policy, through our own sandbox grant funding schemes, a lot of opportunity for ideas to flourish, to get experiments to this whole ecosystem. And that creates that buzz, that innovation effect we look for a center to have, that helps to propel this fintech story for Singapore. Second, on the network effect. It is equally important for us not to tell a great story in Singapore, to also have a connection and impact globally across multiple ecosystems, multiple jurisdictions. And if you don't have a good network effect, the technology we're pursuing, the innovation we are pursuing will not scale and not become pervasive. For example, we started looking at blockchain as a way to experiment on areas like payment systems. And we started a project called Project Ubin. And it took us 5 phases to get to a point where we have now built an ecosystem of 40 banks which are working globally with us and multiple regulators for a common program. And that creates that network effect of people looking at Singapore to do a meaningful experiment in the space of blockchain and also in the digital currency space. Similarly, in the area of AI, we started Feed Principles last year. We started Project Veritas. Within 6 months, 25 global partners are already in that space. So having projects like Ubin, Veritas builds that network impact. And if you build that well, it again brings that whole hub into some relevance in the global community. And the third piece is around the ecosystem effect. There's not a bigger testimony to that than Singapore FinTech Festival. Means in 2016, we planned for a festival for 1,000 people, and today we end up with a 60,000 plus festival, and that really builds that ecosystem effect for us. Whatever happens throughout the year, we tell the story. The global community comes here, they energize the crowd here, and that vibrant ecosystem makes a lot of difference to our community here. We have a strong educational centers developing talent. We have a strong association bringing the community together, and there's a strong investor community. And thanks to our historically a strong financial center, we have a very strong bench of investors who can pump in growth capital for the fintechs to grow for the businesses outside Singapore. And the last space is regulation. I think regulatory support and a strong regulation works in favor of a strong fintech hub. And our well-known, well-understood tech risk management guidelines went very strong in terms of building that a strong base of fintech who can be truly resilient. And when they work with FI, who are highly regulated, that give an opportunity for them to, and from an outsourcing perspective, to have a true partnership. In fact, during the crisis, we put together a framework for fintechs to self-assess themselves against the tech risk guidelines, which truly builds a sense of strong framework for fintech to think how they can work with the banks. So, I can talk about the whole Payments Service Act. It's a great example how we looked at the ecosystem in 2016. We didn't bring regulation immediately. It took us 4 years. We consulted with the industry. We kind of broke that whole payment regulation into 7 parts: modular, risk-based, and risk-appropriate. That clearly shows that if you have thoughtful regulations, a strong regulation that helps to build a strong ecosystem, a strong innovation hub, or a strong fintech hub, if you want to say that way. So having these 4 aspects executed well, planned well, and thanks to a lot of our bank CEOs who are part of the ABS, part of the Association of Bank, they really work with us very closely to help us to also think about what kind of national infrastructure we can build together. The pay now infrastructure, the fast improvement, there's a whole sort of example which we have built in partnership with the banks and the members bank in the ABS, which truly shows that Singapore ecosystem is a collaborative ecosystem. It works through partnership. It doesn't mean that every time we say something, Piyush agrees. We always have debate, and Piyush always pushes us back. We push him back, and that's a healthy debate we have created. And there's a mutual respect we have for each other when you think about introducing something to Singapore. I think that's kind of a broad story over the last 5 years, and we hope to continue to build that. I think the second part of the question, what next, right, Pat?
Yeah, so I think we'll come on to the what's next part, but I think we're gonna switch gears and
actually, Pat, may I? So let me segue a little bit in the what next. So here's one of the big issues, and certainly it's something that's on my mind, and maybe it's on your mind as well. And there's this, various people have called that the amount of digitalization that happened in the last 3 months, courtesy COVID, was more than had happened in 3 years, or 3 or 5 years worth of digitalization happened in 2 months. Now, that's great from a global standpoint and from a Singapore standpoint. What that does mean, though, is I think the bar has been raised. So if I think I had 3, 4, 5 years of a head start and lead over a lot of banks, I can tell you a lot of banks have caught up in 3 months. And not caught up entirely, but certainly made giant strides because they didn't have a choice. Now, when you think about Singapore, is that also possible that there's no country or center I know which is falling apart because they did not achieve a payment system, digital payment system, or they couldn't get digital transaction processing done. So obviously every center made great strides in the last 2-3 months. Does that worry you that other countries and centers might have played catch up and therefore you need to raise the bar?
You're asking?
I'm asking you.
No, I think I would, Piyush, let me defend my position here. I think we have, and I'll tell an example. There's a question asked to me earlier, why Singapore took time to issue new licenses or think about new licenses. My argument has been, it's all about timing and good homework. You can't issue a digital bank license where account opening is still a manual process. We first thought about, let's build a national infrastructure which allows you to do eKYC. You can't put a digital bank out there where the payment processes is not really that smooth. So you have to put an infrastructure like Pay Now, a fast-like infrastructure, allow open connectivity. So some of the homeworks we have built is infrastructure type. And having an infrastructure is not easy, something you can build overnight. A strong digital identity platform is not something you can wake up and say, look, I'm going to build something tomorrow. It takes time. Having put together a strong digital infrastructure at a national level gives us still a strategic advantage. And for us to stay ahead of the game, I think we should start connecting it to other countries. If we can rapidly catch up and start connecting these rails, I think we can still stay competitive. But I strongly believe competition is not bad. If everybody catches up in the fintech space, there's nothing wrong with that. In fact, I think more positively, because then it brings a bigger network effect, and hopefully we can do bigger things together.
Given you brought up the digital banking licenses there, so there's an audience question here for you, Piyush, about how you'll respond to this new competition when it comes into Singapore. Do you care to comment on that?
Yeah, I actually wrote about it a bit in my annual report. So let me see if I can paraphrase my thoughts. And I guess to start with, I mean, all forms of competition keep us on our toes. I think Mohanty said it well just now. And so we're never complacent about competition. But Singapore has 200 banks. It's got 9, fully QIB banks which already compete, and these are all fairly effective and good. Stan Chart, Citi, HSBC, etc. We compete with all of them. But at its heart, I believe that we've also built capabilities today which are as good as any digital offering anywhere in the world. I benchmark and compare not just us, the Singapore banking system, our digital capabilities, and frankly, by and large, in most part, they're very, very competitive. And therefore, to me, new competition would be just like a couple of more people getting a license. We have 9 already; there'll be 11. And the nature of the players in terms of the core capability companies is only shades of difference. But I think the more important things, and here's what I wrote in there, the number one issue is this, that I don't think there is a large gaps in the Singapore market. In most places where FinTech has been widely successful, there were obvious gaps. In East Africa, Kenya, Tanzania, etc., the banking system and the payment system wasn't developed, so M-Pesa did really well. In China, even when Ali and WeChat, etc., got started, the prevalence of easy payment capability was very limited, and therefore, and partly helped by regulatory benign neglect, they were able to build out a huge payment differential. But in a country like Singapore, as Monty said, the infrastructure exists. All of us make instant payments to everybody all the time, so the gaps are not obvious. There are some obvious places you can work. You can go at the low end of the consumer chain, compete in the money lending space. MES has some pretty tight rules on how much exposure they want in unsecured lending. You could do some more in the micro SMEs. If you look at the total revenue base in the wallet, in all of these spaces, if you put all of that together, that's like 2 or 3% of the market. It's quite tiny. So the first point is this: the untapped spaces in Singapore are not large. The second point I made, I think I already said, the incumbents here are extremely competitive and well developed. So it's not that you're competing in a place where there's huge delta you can create. Our capabilities, we do instant payment everywhere. We use robo-advising on investments. We have fantastic account opening, which does instant account opening. We do instant FX. Some of the FX providers who actually come in or come to us to take FX pricing because we do better FX pricing, and they connect with us through APIs to take the FX feeds from us. So obviously our capabilities are quite competitive in that space. So I think from that standpoint, overall capability standpoint, I think it's quite good. A third thing which gives me reason for some confidence is in many countries, the fintechs really competed by burning money. And frankly, everywhere, it's like the e-commerce space. You can burn money endlessly, and you can do that because you're backed by a different source of capital. Sometimes you're private, and you can burn money for large and long periods of time without a consideration to profitability dynamics. Now, the reality is that this is changing. After the WeWorks and Uber IPO, nobody is willing to pour money endlessly. And I think as we come out of the COVID, we'll find that's even more true. Many of the fintechs are already, you can see that many of them are laying people off because the ability to continue to subsist without focusing on EBITDA and cash flow is getting questioned and challenged. And therefore, as you go to start thinking about cash flow and profitability, you can't continue to invest money endlessly in freebies and buying customer loyalty. So I think that will be a bit of a problem. I also think many of the fintechs who try to come in for these licenses actually come in with many partners. Now, a lot of people think that's good, it's a consortium. And I think that's true, it's a positive, but it's also a negative. Anybody who's worked with partners realizes that getting decision-making when you have 3 or 4 different fathers to a project is not easy. And sometimes agendas are not aligned. So you have 3 or 4 big players. Even if one person has the deep pockets and the other shareholders don't, you always get stymied. When one shareholder is driven in a particular agenda, the others are not, it gets stymied. And finally, the MES, as Monty said, the MES, I think the regulations have been pragmatic. If you look at what they're trying to make sure, in my own, this is not something they've told me, but my assessment is they want to make sure the financial services industry does not have the same degree of instability and uncertainty that you saw in the e-commerce industry. or the ride-hailing industry, where you can have massive shakeout. In financial services, that's not. If you have a Wirecard incident, for example, that's not good for a financial ecosystem, and financial stability is something that impacts all of the players. Now, the MAS regulations therefore be pragmatic, that while you can get started with small amounts of capital, there are important hurdles and benchmarks. If you want to get beyond $75,000 of deposits per person, you want to get over $50 million of deposits in aggregate, you got to start putting in more capital, and at the margin, your capital requirements go up to $1.5 billion. So you really have to be a fairly serious player with a profitability agenda, which by the way, MAS will check that you have a profitable business model over time before you can continue to work. So what I said, I mean, we're not complacent. You always have to worry. I do think because of all of these things, the Singapore banks can hold their own as we go forward.
The competition is a good thing. I'm going to change gears and talk a bit more about a segment of society that has seen many challenges over this period, and that's migrant workers, where maybe there aren't enough fintechs or enough innovation that's happened yet in that space. Sopnendu, question for you. What are the key challenges and some of the innovations that you've seen emerging to address this financial inclusion issue?
Good question, Rebecca. I think, and I spoke with Piyush also other day about this. One of the glaring exposed, I'll say, as part of the COVID-19 and the pandemic, we saw a significant impact in spite of so much of fintech we talked about in Asia. Right at the edge of the crisis, as an example, in India, 100 million migrant workers left their cities in 2 weeks' time back to the villages. They couldn't sustain for 2 weeks. I mean, they've been spending there for decades of time, working hard, but they didn't have a financial sustenance services which they can rely on, savings or some kind of pension structure which they could use to just survive. And it clearly shows that there are certain segment of population we have not really served them well. We've got to find a new model where, and I don't have an answer, maybe Piyush has an answer here, but there is a need, there's an urgent need to think about a certain segment of the population, what kind of financial services we must create for them, where in my mind, should be a continuum of micro products, a micro savings plan, a micro insurance, a micro pension plan, maybe a little micro investment, or some kind of structure by which a small little savings can go in a long way to equip these people during crisis to deal with such unexpected challenges. That's one part. I think one part in a positive way where things have been done quite well, and I think we should thank fintechs for that, is their ability for them to remit back home money. I think we have to give it to fintechs because during crisis, and of course during the crisis, DBS and many of the banks did step into that space, but they have been playing in that space for long. And there are many examples. Singapore, where MyCast, one example, recently got a license during the right to the crisis. They spent a lot of time ensuring that they put the fintech tools for the migrant laborers to send money back home. So there are some positive story which came out because we had a strong infrastructure. Fintech was matured enough to go and put solutions for that set of people to get to the crisis. But fundamentally, I think there is a problem here. And we got to find a way to work together to build some kind of infrastructure where all this undocumented or casual workers, gig economy workers, and we need to find a way to build a financial system which is sustainable and can go in really coming during the crisis to support these people, or else I think the next pandemic can break the backbone completely.
Well, but let me tell you that. So on the ground, I think this COVID in Singapore has already been a game changer. So, at DBS, we banked migrant workers and domestic staff, etc. We're the biggest, provider of services. But truth be told, over the years, it's just been public service because they're massively unprofitable for us. In fact, of our 4.5 million people that we bank, about half of them are unprofitable in any case. But certainly the migrant workers and domestic staff is a big chunk of that unprofitable customer segment. We've just done it as a public service good. Now, the only way you can deal with this, apart from creating micro products, but for migrant labor, some of the micro products are also challenging. The real issue is you've got to change the cost to serve. And because we've not come together as a system, our cost to serve has been high. When we started seeing more of these COVID cases in the migrant space, We suddenly were approached by the government saying, hey, we have a challenge. All of these workers are being, confined to dormitories. They don't have banking accounts. They don't have ATMs. Can we do something? And because we were able to get a coalition with the government on trying to accelerate change, we were able to cut through a lot of bureaucracy and do that very speedily. We opened 40,000 migrant worker accounts in less than a week. It would normally have taken us a year with a lot of work to do that. And we did that because we wired up everything between the Ministry of Manpower directly into POSB and DBS, dropping the cost to serve dramatically and accelerating the account opening process. We also actually put ATMs in all of the dorms, also in a couple of weeks, to be able to take care of the problem. But what we've been able to do since then, because we've got this infrastructure problem solved, we're also being able to allow this instant money transfer and remittance. So in the last 2 months, our actual account activity for migrant workers, account opening, account usage, and remittance has gone up exponentially. So it is possible to provide inclusion into the space at an affordable cost point if we collectively work as a system to drive the bureaucracy and the meaningless costs out. So I think that's actually quite helpful. And when you get that done, you can actually create very competitive and value-added products which are not a financial drain or a burden on the system. So I think we made more progress in the last 2 months than I have in the last 5 years. It's been a big agenda for us for the last 5 years, and we made more progress in 2 months than in 5 years.
Yes, just to quickly repeat again, I think one of the things, Piyush, we got to think is that if we don't do much on this space in the micro space, there's one number which scares me a lot, that by 2050, they say that 2 billion people will be over 60, and a bulk of them will be in Asia, and they'll have nothing, no pension to live on. I think this retirement plan also is another big challenge to be solved for, and how to go about it, how to build a structure, how to build the back-end infrastructure, the asset management structure, which can fund this demand, is going to be something to look forward in terms of challenges road ahead.
I would agree. I think it's a global challenge. The richer countries have done better at solving a social security arrangement and a pension system. In the US, one of the outcomes of the Great Depression was Roosevelt's New Deal, which is the first time they put in a social security and a dole program. It's true that many parts of the world, Asia, Africa, etc., included, you don't have those social security and safety net arrangements. And it does take crises like this to propel governments to do that. A lot of that is, as you said, it will have to be reliant on the private sector and private savings, so micro pension plans, etc., because governments don't have the fiscal space to take it on their balance sheets. But in countries like Singapore, I think because we've always had a very good social safety net, the CPF program and the bottom line safety net is actually quite robust. It covers Singapore. And when you start creating that kind of social safety net for migrant labor in the country, then it runs into other socio-political kinds of issues. But as a broad generalization for countries like India, Indonesia, Vietnam, around the region, I would agree with you. It's one of the big challenges of our time.
In fact, there's a great example. I heard that in Gujarat, the bank called Seva Bank, 3 lakh women right to the crisis had no such problem. In fact, there's a number which shows on the 4th month of crisis, they started increasing deposit base. And there are 3 lakh women, self-help women, who built a savings plan, and they could see themselves through the crisis. So models exist, good examples exist, and how to scale is the big question.
It's definitely good to hear those green shoot stories, and certainly it's a great example to share. And I think we want to kind of switch gears a little bit, and it feels like we talk about the global pandemic, and that's all that we're talking about at the moment, because it's permeated every industry, it's permeated every single product as well. But I just want to take a breather for a second about this and maybe talk about some of the secular trends. And in a conversation, Piyush, that we had earlier this week, you talked quite a bit about some of these secular trends that you're seeing. And so, these trends have existed pre-COVID-19 and will continue to impact financial services going forward. And one of the things we wanted to do was engage the audience. And so we have an audience poll to get the audience's view and opinions on what they think are some of the key trends. And so you should be seeing that on your screens now. Unfortunately, Piyush and Sops, you can't vote on this, but you can see the results when they arrive shortly. And so while we're waiting for the audience to share their thoughts, I I'll start with you, Piyush. Which secular trend do you think, or do you see as having the biggest impact on financial services over the coming years? It doesn't have to be any of the ones we've listed here, but if there's one that you want to call out, it'd be good to kind of share your thoughts on that.
Actually, I think the first four, actually all of them, on your thing, maybe
you can only pick one, Piyush.
Comment. Well, it's hard to say. I don't believe in forced choices if you have equally important. I think AI, data, and big tech will be big. I mean, machine learning will be big because I think data is going to drive everything. I think sustainable finance will be big because this is a game changer, and I think the world's going to focus much harder on, like I said, the tail risk of climate and sustainability. So I think it's going to be a big agenda. If I had to pick two, I'd pick those two. I think central bank digital currencies are coming. It might be further out. I'm not sure you'll see the same impact in the next 3 years as of the first two. So maybe why don't I pick up those two in that case. Like I said, paraphrase, I think sustainable finance, the time is here. I mean, there's no question that the energy and momentum around the sustainability agenda, I think, is going to pick up. Some people argue that because of all the problems in the world, sustainability might take a backseat. People will focus more on economic development than green finance and green development. I think differently. Like I said before, people have got used to the notion that we'd better make some short-term investment for long-term gains. So I think the energy around this will increase, in my mind. I think disclosures, measurement, impact assessment, tools, etc. I think they're all going to pick up. And data without another big thing. I think the world is completely data-driven. We haven't figured out AI and machine learning and how data impact jobs and how data impact customers. You're going to fight through the battle. That's definitely going to have a profound impact.
Thanks, Piyush. And Sops, what's your view on
I think Piyush has pointed out rightly that AI and big data is a big part of the growth. But somehow, because you have put this question and you want some interesting response, I would say that if the wholesale digital currency takes place, they can play a significant role in simplifying the cross-border payment. In fact, largely banks have solved national infrastructure, have solved the domestic payment issue. But when it comes to cross-border, it's still a big challenge. The big trend can be that if there is a collective effort in mind.
Actually, Pat, I'm getting a lot of disturbance and I'm hearing messages from other people. There's a breaking noise and disturbance. Is there a way to fix it?
You can
just give us a few seconds. We'll look into this. Yeah, give us a few seconds, and maybe in the interim, I think my sound seems to be okay. It seems to be emanating.
I think everyone sounds okay now. Yeah, Piyush, I think you fixed the problem by identifying the problem. So carry on, and we'll keep trying.
Fantastic. Please carry on, Subs.
So I think data is there. I was trying to say that digital currency, while it sounds to be very early stage, but if the wholesale part of the currency discussion takes a collective effort, we can solve this cross-border payment issue, which we're still struggling with in many forms. So that's one to watch out for. I think big tech is over in my mind. It just is a phrase out there because tech is fundamental to all of us as we grow. And sustainable finance will become almost like a must-have. And regulations will come behind it. National policies will come behind it. I think we'll have no choice but go and fix it, and it's good for our own good. I think all of us are responsible to get this right. So my bet, data AI is already making a big trend. Watch out for digital currency. Sustainable finance is a non-negotiable contract.
Okay, and we're going to flash up the results now, so you can kind of see what the audience think about this. Hopefully you've not influenced them too much, but was this what you would have expected, Piyush?
No, because I don't think open platforms and open data are as impactful as the other things I talked about. AI and sustainable finance. If you think about open platform, open data, there are a couple of issues. Number one, the issues of privacy have not yet been resolved, and therefore it is not entirely clear what kind of data is accessible and usable across the board. Things like GDPR make it very hard. There's lack of rules and frameworks around what data people really want to do, drive, and use. So I think it's not easy. Second, I do, if you just think about this in terms of using data to drive AI, then yes, absolutely, there's a big opportunity. But if you think about this, open platforms are going to change the nature and shape of financial services and offerings. I am less clear that that's going to happen.
Pat, let me redefine open data in a different way. I think the open data is largely misleading in many sense because what Piyush articulated is quite correct. Let's see the Singapore way of defining. In fact, towards the end of the year, we are putting together an API marketplace. And we can call it open data because it is a collective effort from the banks to put a national gateway where customers can consolidate the balances and see from their preferred banks they bank with. And is that an open data architecture? Yes, to me, but it has got a certain balance because you can only get access to data if you contribute to the data. So the principle of, and the whole infrastructure is built around certain principles, certain level playing field. So in a way, I think we should think about open data as a community practice where the people who are participating should also not think about only taking away, they should contribute. If there is a model where you can come together and banks and the non-banks have a way to share each other data, and there's a value proposition in ensuring there's a level playing field, it can be achieved. There's some form of that you will see in Singapore towards the end of the year as part of our API marketplace, where you can see banks are publishing their respective APIs, which allows customer with consent and appropriate governance structures on top of it to be able to share each other data for things like wealth management and other opportunities in as banks can feel appropriate with. So there is a form of open data, but not the way I guess it is thought through in this particular poll.
I'm going to move on to some questions from the audience. We've got 58 questions, so we won't get through all of those in the time left, but there's a clear theme here for you, Piyush, around upskilling, reskilling, talent development. A question about DBS's plan to hire a huge amount of new roles into Singapore and the region. But yet we're seeing globally that a number of banks are actually reducing the number of staff and going for a lean and mean approach, is how it's put by this attendee. Could you talk a bit more about the sorts of roles and jobs that are being created and your plans for this?
Well, without a doubt, I've said before that today every company is at heart a technology company. So I genuinely believe we are a tech company offering financial services. And if you don't believe you're a tech company and operate and think like a tech company, you're going to fail and die. It's, Mark Anderson said it well. Software is eating every industry, which means that industry borders are different, are disappearing. So to me, everybody's a tech company. There's a case in point. When I started this job a decade ago, we were 95% outsourced in technology, and we had a couple of hundred engineers. Today we are 95% insourced, and we have 7,000 engineers. We have more engineers than bankers in the company, and we have large engineering centers everywhere, and that includes everything from coding, design, AI, data, machine learning, the whole slew of works. So a large part of our hiring continues to be in that space, in the engineering space. But engineering very broadly defined. I'm not just talking about coders. I'm talking about a whole range of different skill sets of the sorts I mentioned. They're also not technical sometimes because business translators, data analytics and analytics people don't even actually have to be geeks. So we're hiring a lot of people in that domain as well. And finally, I also think that there is also increasingly a need for many more soft skills. So when you think about consumer behavior and trying to gain insights, when you think about digital marketing, then you're really talking about a lot more soft skills. So we're hiring people who got anthropology, ethnography, design, psychology, even philosophy backgrounds. We're thinking hard about the rule of data, use of data, what makes data okay to use, what's not okay to use. We came up with a framework called PURE. Data must be, purposeful, unsurprising, respectful, explainable. But to come up with these frameworks, you need people who understand the philosophy of things. So we're hiring in a whole range of different areas, but which cater to what I think of as the new world, new economy. By the way, the other area we're hiring a lot on is in sustainable finance and understanding the circular economy and sustainability. So a whole broad range of roles and jobs. Now, it is true, like in all of the lean and mean operations, we will be reducing staff in other areas. So the net number is an aggregate number. In the short term, I'm committed to not retrenching anybody, but in the long term, you will find jobs disappearing. And those are jobs with large amount of, both operational content, paper content, the front end, tellers, branches, call centers, all of these jobs are going to change. If the job doesn't disappear, the activities in the job will change, because half the activities will be automated away. You can apply RPA, you can apply NLP, natural language, etc., to eliminate a large part of activities. So you're going to at least reconfigure the job, even if you don't eliminate the job. So in our own thing, we've been very focused on trying to see how do you reskill the people, so you don't have to let people go, but you can use people and repurpose them to do new jobs. In 2016, we identified 1,200 jobs at risk in the next 3 years. And we set up a reskilling program for these 1,200 jobs. Like I said, that included our tellers and our contact center staff. At this point in time, we've been able to reskill almost the entire lot. I think 1,100 odd out of the 1,200. And we've been able to place back into different roles about 400-500 of them. Some of them retired and moved on. But we know, therefore, that in some large measure, it can be done. But you have to work at it. I believe that reskilling, particularly learning at an older age, it comes from doing. You can't teach people in a classroom. So the learning, reskilling education comes from hands-on practice and doing. So from 2015-16, we started driving this program of hackathons to teach people to get involved and learn by doing work in small groups and experiment. And so you got to create a culture of experimentation. You got to create a culture of learning by doing. What I talked about earlier, this Amazon Deep Racer program, that's part of this thing. We've trained up 1,500 odd people in the last few months in AI and machine learning, and how to, if you can't program and you can't do Python, at least you can learn about how do you tweak models, how do you improve models, and how you get better outcomes. It's easier for you to do that. And you gamify it to teach people. So the most unlikely people are learning these things. My HR department, my compliance department, the audit department, they're all learning how to do things very differently. So I believe the reskilling can be done, but it requires a lot of focus and a lot of energy. And like I said, learning by doing.
Thanks, Piyush. There's a number of great initiatives that clearly that you guys have been doing, and also some really good sound bites as well for the audience to chew on. I think the sound bite around tech company offering financial services is a dynamite one. And I just want to stick on the same kind of theme of talent and also the world of work. And, Sopnendu, what do you see as the future of work? How do you see this evolving, say in 2021 and beyond? Because clearly things won't be the same as they were pre-COVID-19.
Absolutely. I think we are already talking about what you call low-touch, high-tech economy. I think most of the post-COVID recovery will be on the back of technology, because social distancing will stay for long, which means a lot of these companies will start digitizing themselves, which means the kind of workforce they need to have is definitely tech-enabled workforce. I agree with Piyush, you don't need to know coding, but you need to have some tech skills to participate in this re-architecting of companies who are going to participate in the economic recovery post-COVID-19. So using technology as a way to upgrade your skills is definitely a way to go. And I also strongly believe that there are new evolving skills, which is around, I use the word called digital empathy. And in fact, I'm going to complain using this platform. I used to use quite a lot this e-commerce sites, but during COVID-19, it became the only thing I can do to buy stuff. I suddenly found that severely lacking in digital empathy. There are things which is not working there. The customer service was bad. Sometimes the goods are all over the place. You don't know where they are stuck. So suddenly this e-commerce site became exposed to a real consumer experience demand, and what banks have been going through many years. But now COVID-19, high-tech, all on e-platforms. So there's a time every e-platform has to start thinking about building a new kind of skill set, which I'm going to use a phrase called digital empathy, because you just can't take a bunch of code and throw it there with a beautiful screen, hoping that will solve the problem. So there's a need to build a hybrid model, which means there are some people skills, there's an empathy to be injected while you're designing this new interface for people to participate in economic activity. So that's the second piece. And third piece, I agree with Piyush, sustainability skills we need to have, because more and more finance will be backing projects, products, companies which have sustainable agenda. So there's a need to build a whole set of new skill set who can participate in supporting such companies who are looking for finance backed by their own sustainable agenda. And the fourth part, which I want to re-emphasize and close here, that we cannot delay the process of completing our promise of digital rails. And the second part to this is time has come to reconsider our data residency rules. Because if we are going to participate in the global supply chain and it will be so low touch and high tech, I think the data has to flow in a thoughtful way. Time has come to think about infrastructure which are interoperable. Time has come to think about data which is regulated but still are able to go cross-border in a way they can work well. Because if you don't fix these issues, I find it hard to think how we do a proper recovery plan out of this pandemic.
And by the way, I think that's well said, but that is going to be one of our big challenges. One of the downsides coming out of this pandemic is an increased sense of nationalism. And you can see it in country after country. It happened after the Great Depression as well. The borders go up, not down. And that includes tariff barriers, it includes beggar thy neighbor, it includes your country first policies. One of the attendant outcomes of that is I think you will see more data nationalism as opposed to data internationalism. And it's going to need a lot of effort from broad-minded regulators and leaders like yourself to try and drive a different kind of consensus around the data issues. I would agree with you that that's one of the big challenges that we have, but it's not going to be easy. And I think COVID has only made it harder, not easier.
Or it has made it stark that we need to fix it.
We're coming towards the end of the session now, and there's just one final question that I want to ask you both. There's a lot of unanswered questions from the audience, so we'll try and get those to you after the session. So during this session, we've touched on the response to COVID-19. We've covered financial inclusion, sustainable finance, the future of work, and then just now on the risks of data nationalism as we come out of this period. Personally, from your own perspective, what's the next big challenge that you're looking to take on? I'll start with you, Piyush.
Well, I want to go back to this theme of acceleration more than a massive shift. I do think some of the things we've all talked about, it is there in your poll, are real, but in many of these, we've barely scratched the surface. So there's a lot of work to be done in each of these. I said, on digitization, we've got to make sure the customer journey, what Mohanty referred to as digital empathy. We've been doing a lot of that. I've been relentlessly focused on improving customer journeys, but there's a ton of work to do with that. We've talked about sustainable finance. But if I had to choose one, to me, it is about data. I think data is not just the new oil, it is the new air, which means you can't control it. And it's going to drive everything. In our own case, we're really trying to see how we can convert the company to a completely data-driven operating model. Now, what do I mean by that? If you think about the F1 in the old days, the driver was the principal agent who drove the car. You could instrument the car, but you sort of looked at reports later, and then subsequently for the next month's race, you could sort of figure out new strategies and so on. Today, the F1 runs very differently. The car is instrumented, it's got 200 sensors, but it's not just the car, the environment, the atmosphere, the climate, the rain pattern, everything, they've got sensors out, everything is instrumented, everything gets into a control tower, and the control tower is making real-time decisions and telling the driver what to do. So the driver's role has changed fundamentally because data is telling him exactly what to do at any point in time. That's what industries are going to get to. And some companies like the Amazons of the world are much better than others, but banks have to get there. And so for me, that is my single biggest occupation and agenda right now. How do we convert the company to really being a data-driven company?
Thank you, Piyush. Same question to you, Sop.
I spoke about, we did the innovation effect, network effect, the regulation effect, and the ecosystem effect. I think we're going to continue to build on that. But the one thing I will start shifting my focus is the platform effect. Because as we know, it's going to be high tech, low touch. We're going to find a shift from our physical manifestation of innovation center to a digital innovation center, and how to create a series of platforms for experimentation, series of platforms to connect trade. And we already started working on Business Sans Border, which will be renamed as Proxtera, I believe. So that will start connecting small, medium enterprise. How to think about experimentation. We have started working on a platform called API Exchange for last 2 years, and we can see a large uptake during this crisis. How to again expand that platform so that we can do more experimentation to that platform, and think about data connectivity, green platforms, because if you want to do a true green finance, it has to be backed by a green platform which can allow you to measure and monitor the impact of green finance. Today we don't have that, and it's not easy. And I would strongly recommend people to go a site called Safecast, SAFECAST. There's a lovely site which actually talks about citizen science. And they have created a distributed, empowered every citizen to carry a device, and that device can monitor air quality, radiation quality, and one more I can't recollect. And that can be sent to cloud. And suddenly you see around the world different color code to see how the air quality is. To me, that is a citizen science. Can we build something like that? So everybody's empowered with devices which can generate data. Then we can build application for green finance, monitor the impact, monitor these projects where the money went. I think going after platform will be a big part of my push. I hope we can get there as soon as possible, because without a platform construct, I can't imagine how the new world will look like.
Where there's a will, there's a way, Sops. And sadly, we've come to the end of this session. We've covered a lot of ground today, and I just want to thank everyone for joining in, and especially to our speakers, Piyush and Sops, for sharing their candid thoughts. So the last thing I want to say is happy Friday, and have a great weekend.
All right. Thanks, everybody.
Thank you.